I saw a very interesting article yesterday. It said that Apple is now worth Meta, Google, and Amazon all combined. You've got to remember, guys, these four companies were all were trillion-dollar plus companies. And now they're saying that Apple is worth all three of those companies combined. Is that shocking? Well, yeah, a little bit, because some of these companies were absolutely huge, but they've fallen a lot since their peak. Apple is not. But if you've watched our videos in the past, you've seen us make this statement. I personally believe that we will hit a bottom in this market when you start seeing people give up on Apple and Tesla. These are the companies that everybody thinks are untouchable. Even though Tesla's fallen 50% from its peak at one point, I still look at Apple as this is the company. It doesn't go away. It keeps selling phones. It generates tons of cash, which is all true. But the question becomes, at some point, can you overpay for a good thing? Now, as you watch this video, I want you to do something. We do a lot of videos every week. We have over 1,800 videos in our library. We record and post 2 or 3 videos per day, especially during earnings season. So we're going to have videos coming out later today and next week about all the earnings, etc. So you need to subscribe to our channel, because I guarantee that if you watch 4 or 5 of our videos, you will walk away with a better understanding of money, because the more you learn, the less you fear. So let's take a look at Apple and the other companies that I just mentioned. So first off, Apple. Apple's at 140. I don't know what Warren Buffett's buy price is, but my guess is it's around 140. It just hit there right now. Now, for me personally, I evaluate the company. I don't care what Warren Buffett says. That might sound like a ridiculous statement. I like the ideas of Warren Buffett, but he's got hundreds of billions of dollars in cash that he needs to deploy in the long run. So I think his desire to make a ton of money, he's not trying to get 15, 20% returns on his money necessarily. But when you look at Apple here, the stock's currently 140. The all-time high is 182.94, which is also the 52-week high. So it's not down a ton. The Nasdaq's down over 30% for the year. This is down, what is this? $40 on 180. It's 20. I mean, it's still a good chunk, but it's not even 25%. So I look at that saying, okay, people still believe in it. And guess what? You should, because look at this. Look at the 8 pillars for Apple. Look at our 8 pillars on this company. Make it a little bit bigger. You've got a high return on invested capital, which it probably tells me that's a big reason why Buffett and Munger like this company. You've got increased revenue, increased profit, very low debt, high cash flow growth, buying back shares. Now, I will say, I don't know how much I like this buying back of shares with these valuation levels. The only X's on this company are the valuation, the 5-year PE and 5-year price to free cash flow. Now remember, if the company has amazing growth potential or a high moat, which I think Apple has a high moat, you can justify a higher multiple of earnings and free cash flow. But how much is too high? So let's go look at the analyst estimates on the growth level for Apple. I mean, guys, look at this. Oh, 9.11, never forget. I look at this going, okay, this is growth, but it's not huge. And then we look at the revenue growth. It's low single digits. So it's not really a growth play here. It's a play on this company is ingrained in our lives and hopefully will continue to be so in the future. 5 or 6 years ago, Apple was selling at 9 times earnings or 10 times earnings. And somebody I knew contacted me and said, Paul, what do you think of Apple from a value play? And I said, listen, it screams value. The question is their revenue growth sustainable? Can they keep this big high level of revenue? Forget about growth. Can they just maintain this? Boy, was I wrong. Of course, they did. And they've gotten even bigger. So that was my misjudgment on Apple 5 or 6 years ago. All right. Now, let's go check out the other companies that we were talking about here. So let's look at Amazon now. So look at this. Amazon is currently at $90. Its all-time high was $188 in July of last year, 188.65. That is a big, big drop. That's over a 50% drop from its all-time high. This is a company that was all day long almost $2 trillion company. Let's look at the 8 pillars. Oh boy, this is ugly. Now, their free cash flow is down a lot. They're investing a lot. Guys, this is a growing company. The thing I don't like about Amazon, though, is they're so big, but look at this margin. It's poop. Gross margin of 13%. Walmart's gross margin is like 25%. Bottom line margin last year of 2.3 and profit margin of 4.2. Now remember, they have a lot of capital expenditures. That does not hit the profit margin yet. It has to be, the profit margins hit after those capital expenditures are depreciated. All right, let's go to Google, the Goog. And Google just reported revenue was not the best, but look at this, $85 a share from an all-time high of $152.10 that was reached on February 1st, 2022. So guys, we have past videos on Google when I talked about where I need Google to fall, and people were saying, it'll never happen. To which I said 2 things. If it never happens, I never buy. I'm okay with that. But the second thing was, you'd be surprised what's going to happen in bear markets. This has seen a massive drop. What is that? That's not 50%, but that's a 40% drop. Let's go look at the 8 pillars here. It's not as expensive as Apple and Microsoft from a valuation perspective. And let's go look at the analyst estimates for Google. See, they're still showing EPS growth over the next 4 or 5 years and revenue growth, significant revenue growth. So to me, guys, this is becoming a situation in which the market might be overreacting to the slowdown in ads. Does that mean that these numbers are going to be accurate? Probably not. But remember, our job here is to buy great companies at good prices, right? And Google's in that wheelhouse for me. And the final one, Meta. You guys all know Meta. I own stock in Meta currently. It is currently at $88 a share from an all-time high of $384. Now, guys, I started buying Meta in the mid 200s and have dollar cost average on the way down. I am down a lot. However, I personally still believe in it. And look at these 8 pillars. It's selling for 9 and 10 times earnings, buying back shares, which I think is going to be an important part of their future. And let's look at analyst estimates. Again, take these for what you will. $10 this year, 60% increase over the next 4 or 5 years. And revenue still growing because I still believe that Meta hasn't maximized its revenue per user. It still has 3.5 billion of the 8 billion people in the world using their products monthly. Instagram, WhatsApp, Facebook, Oculus, all these things they're building, and they're investing a lot in the metaverse. And that's going to be expensive. Is it going to work or not work? The way I view it is, if it doesn't work, that money pit goes away and the profit skyrockets back up and the cash flow skyrockets back up. So I'm okay with that. That is my plan, Meta. It's a long-term play. Don't buy it just because I own it. I have many decisions to make that are different. So let's go look at all these companies combined in our 8-pillar portfolio. So Apple, let's look at Apple by itself first. You're looking at a company here, 30 PE, 28 price to free cash flow. Some great stuff here, don't get me wrong. 2.25 trillion. So let's go to Amazon, Google, and Meta. Get the stats here. All right, here we are right here, guys. It's pretty close to the Apple stuff, but then you have to ask yourself, okay, would I rather own Apple in full or Amazon, Google, and Facebook? Man, Amazon's everywhere. Now, I do think Amazon I don't know where Amazon stands in terms of its cycle, in the sense of they spend so much growing and acquiring users, and there's so much potential. But I look at the thing going, but it's still having a hard time generating high margins. I think it's been a very, very exciting story. But I look at this look at this PE and price to free cash flow. It's insane. I don't know where I stand on this one. However, if I'm a long-term bettor, I just want to show you guys in this video how different the perception versus the reality. Everybody hears Amazon and say, oh my God, look how much money they make. Well, they actually don't make a ton of money. They do $500 billion in revenue, and they made last year $11 billion in the last 12 months on $500 billion in revenue. That's not a lot of money. Apple does an incredible job. Now, something interesting I will say though, what I would rather do is replace Amazon with Microsoft. So look at Google, Microsoft, and Meta together. If you remember, Apple's market cap was about 2.3 trillion. Now, all three of these companies are more, but it's 3 trillion. So I sit there and say, would I rather spend 30% more but have these 3 companies combined? Google owns the online advertising marketplace. Facebook, social media, and online advertising, and Microsoft, all of our gaming, all of our software, everything. And look at this. Generates $165 billion a year in profit. That is incredible. That's absolutely freaking incredible. I just look at this saying, why would I not want to? I don't know. These 3 companies combined versus Apple. Yes, it's more money, but Amazon, I'm still not stuck on. I feel for me on Amazon, I need to see the consistent strategy of increasing those margins. Yes, AWS is doing awesome, but AWS has a lot of competition from Google and Microsoft. Major competition. Is AWS still the leader? Absolutely. But Google and Microsoft are nipping at the heels of Amazon on AWS. Now, I'm not an expert on which one's better or not, but when I'm looking at these companies, the reason I like this article was it brought up these 3 companies, Amazon, Google, and Meta. And then as I was looking at it, I was going, well, wait a second, what about Microsoft? Yes, I'm going to pay more money, but that's how I want you to think about investing. Every time you invest, it's about opportunity cost. What am I sacrificing? What is better out there? And that's what I want you to do when you invest. I want you to build your own portfolio that is a portfolio of one company. Warren Buffett talks about it in his annual reports. He says you should look at a company, you should look at your portfolio as you own a piece of those businesses. Combine them all into an income statement, balance sheet, cash flow statement. That's what sparked my idea about creating this 8-pillar portfolio. I wanted to look at all my companies and say, how do they look if they were one company that I owned? And that's how you should look at investing. So if you like this, I really need you to subscribe to the channel because there's so many great videos and so many different ways of looking at money that have not been looked at yet. Thank you very much for your time.